quick update on the FTSE Asian 40 Index, which is used as a benchmark for ASEAN performance. As per last week, we highlight that there are potential, what we call a rising optimism, that is actually could actually translate much more better recovery. And as per last week, the recovery did not translate into a stronger performance, because the upside over here, if you look at the chart, still pretty much kept within the 100-day moving average. However, it did create so-called a timely reversal move, particularly right within at 61.8 Fibonacci over here, which represents the major recent high and low structure. So all in all, long-term structure, we are still pretty much, I would say, positive given the timely reversal move last week. But there are strong need for the current index to break beyond the current downtrend channel in order to validate the new upcycle. The reading on the RSI is actually quite encouraging, particularly when you see a breakout move on the RSI earlier. The RSI break is consolidation pattern and also rising above long-term average line, indicating that overall momentum has significantly improved. This actually was backed by another positive reading in MCD, although pending what we call the MACD crossover beyond the zero level. Regardless, we think a breakout move above the current downtrend channel, a new high low structure could actually kickstart a new upcycle, as we put our next target is actually at 10,610, 10,820, while the support has been revised at 10,100 and the psychological level of 10,000. All right, into Malaysia, the index KLCI, we use a weekly chart. Right, the last 2 weeks decline was pretty much quite brutal. You can see there is a three black crow kind of pattern. However, the RSI movement, it was not any lower structure, so there's giving some little bit of a silver lining that there could be what we call that technical rebound in the card, particularly when you see a divergent signal. Regardless, we think the downside could be kept within the current support level, which stand at 1370 and 1350, which if those levels been taken out, the next level of support should be at 1313 or the next low at 1208. As for now, we think the current support is could offer some buffer, at least in near term. Trend remain on the downward. You can see multiple price rejection right within at 50-week moving average, but at least in the near term, we need there is a potential for short-term rebound. The upside could be kept at 1433. If this level is taken out, the next resistance will be at the secondary level of 1500. Right. For small cap, however, they are improving, I would say, technical reading. Particularly when you see the completion of the wave 4 right within at 61.8 Fibonacci level, and the so-called new baseline has been formed as per last week. You see a later 1 to 3 pattern has emerged, but the index still trading below the 20-day moving average. The only what we call that encouraging sign is actually the momentum is about to break above its long-term downtrend line, and MACD also start to showcase slight positive improvement, which means immediate breakout above the resistance at 15,000 level could actually kickstart a new upcycle, as next target will be at 15,350. And the next target will be at 15,750, while the support will be at 14,600. Right, for Indonesia, if you look on the long term, there are triple bottom pattern that was formed, and last week breakout above the downtrend channel is actually signal a further upward movement. So the bottom recovery could actually extend the current gain toward the next technical target at 6773 and 6990. Sector of choice in Indonesia market will be properties and real estate sector, where the index has formed a massive double bottom pattern, which actually in progress since the past 12 months. So the significant rally that we've seen over the past few weeks has actually approaching the major resistance, which is also the neckline for the double bottom pattern. So a breakout was 750 could start to prolong ongoing uptrend toward the next upper target within 800 point, and double bottom pattern at 858. For Philippine, PCI market breakout last earlier above the inverted head and shoulder was being kept right within the immediate resistance, and you can see the index has formed something that we call a return move. However, the return move has been extended further, so we think the current ongoing what we call that constitution within the downtrend channel could be continue. You see the index struggling to surge past the 200-day moving average, indicating the what we call that the sentiment still pretty much mixed, and we expect a further consolidation at least in the near term. We see a little bit mixed signal over here, so because of that, we think the downside again could be kept within current support right within 6,400 and 6,250, while the upper resistance is actually at 6,710 and 6,900 points. And then for Philippine industrial index, we've seen what we call a corrective move in the wave C, so that could actually indicate the end of the correction move. But as for now, we are waiting for much more stronger what we call that breakout move, which is at least above the 50-day moving average. The next target should be at 9,500 and 9,720, while support will be at 9,150. For Singapore SCI index, the ongoing correction could actually at the tail end, and the uptrend line that you see here is been drawn for 2 years kind of uptrend line, which is pretty much intact. The correction could end earlier as the as the index build a new what we call that bullish divergent signal against RSI, indicating that technical rebound is in the card. The next target will be 3,240 points and 3,330, while the support will be 3,130 points. And then for IH asterisk index, the ongoing downtrend still pretty much intact. Any upside could be kept within the current resistance at 1,130, as we expect the downtrend to continue, looking to test the lower support at 1,090 and 1,070. For ACT index, Thai just staged a solid breakout move last week. So the breakout was backed by equally bullish reading in RSI and D trend, indicating that ongoing rebound could extend further. So the next target will be at 1,570 and 1,600. Support will be at 1,520. For my index, the downtrend is pretty much intact. So any upside could be kept within the current resistance zone. So be mindful if there any reversal signal occur within the resistance level. For Vietnam index, the uptrend still pretty much intact. We expect the uptrend to continue. If there any pullback, it could likely to be kept right within 50-day moving average, with the next target set at 1,125 and 1,150 point, which is also Vietnam index, also one of the top performing index in the Asia market. Last but not least will be Asian index, trend remain positive. We expect some profit taking, downside again to be kept. With once selling pressure be normalized, we expect the uptrend to continue with the next target at 231 and 240.
Do 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 do.